Okay, well, let's get started. It's 2 o'clock, and I do see a few new names that have shown up in the participant box. So this is our second presentation in a series of three, and all of a sudden somebody's pounding outside my office. But anyway, session two in a series of three presentations, and we are just a few logistics. We're recording this for sharing in the future. We have with us today Wanda Bird from BDO Accounting. I'll introduce her in just a minute. We will go until about 2:50, and then we have a third presentation after that. And I'll monitor the chat box for questions, so feel free to type to questions in the chat box, and we'll try and allow some time at the end for questions as well. And so with that, let me introduce Wanda. So Wanda Bird is a manager of business services and outsourcing at BDO Accounting. She works with closely held companies in all industries, but specialize in high tech, startup, and growth businesses. Areas of expertise include SBIR and grant accounting, income tax, payroll and payroll tax, sales tax, and software selection and support. And Wanda, if you have more to say, more to fill in, I'm sure you will. So let's turn it over to you, Wanda.
Thanks, Brian. And thanks to you and to Todd and the rest of the CTC group for having me today. I recognize a lot of the names and the company names. I know I've worked with quite a few of you before, so good to see you guys again, and nice to meet those of you that I have not met. As Brian mentioned, I work a lot in this area with startup companies and growth companies that receive SBIR funding. So congrats to all of you. I think you are all in the phase 2 group. So congratulations to you all. I've been working in this area for about 20 years or so, probably about half my career. Been in public accounting my entire career. Previously with Smith & Justelin, and in 2018 S&G became part of BDO, and so now working with BDO. So what I hope to accomplish over the next 45 minutes or so is to discuss why this topic of grant management and accounting 101 is important to you, and obviously to the federal government, and then what you can do to ensure that you stay in compliance with the various requirements. This is certainly not meant to be all-encompassing, but at least it should give you a taste of what you need to be considering when you're dealing with your SBIR grants and any government funding for that matter. So first, we'll just kind of do a quick compliance overview. We'll talk a little bit about the grant management requirements and some common pitfalls, and then I've got kind of a case study that we will look at. So why is compliance important? Well, first of all, this is considered free money, and I use the word free in quotes, but it's kind of free money from the government. As you know, you aren't giving up any equity when you get an SBIR grant. It's not a loan that you have to repay to a bank or other lender. It's not convertible debt. But as such, you do need to be good stewards of the federal government and the taxpayers' money. So you need to maintain compliance, and by doing so, you strengthen the trust of the federal agency that you're working with, and they may be more apt to fund companies that are good stewards versus those that are not. Certainly in the past, companies that have failed to be compliant are less likely to get funded a second or third time. We'll discuss this a little bit more later, but as all of you probably know from reading through the fine print with your SBIR grants, compliance isn't really optional. Also, depending upon the agency that you're working with, you may need to have a grant audit down the road, and the compliance will be tested at that time, and you certainly don't want to have any findings. Now, this grant audit could be one that you would have to pay for by getting, an external CPA firm to provide you with with a grant audit, or it may be, you know, if you're working with the Department of Defense, it may be DCAA, the Defense Contracting Auditing Agency, that would come and do an audit. Some of these audits are pre-award. Some of you may have gone through that with some of your agencies where they'll you know, in the past they would send somebody out, but I'm guessing now they're more virtual. You would have a pre-award audit, but a lot of times it is post-award and post at the end. So let's say that you fail to meet the compliance. Now that we know that that's mandatory, what happens if you don't comply? Well, there's different things that could happen. First, the government could impose additional conditions to you. This could be a wide variety of things, but certainly any conditions that they could impose on you, you know, could translate to more time or money for you to remedy the situation, and that would take away from your research time. They could also temporarily withhold cash payments. Any of you that have NIH grants know that if you're late on filing your quarterly PSC 272 report, you aren't able to make another draw request until that report is filed. That's one mechanism that NIH, for example, will use to keep you in compliance. Other agencies would have, you know, other similar means. Also, if you're not compliant, you could have some of your costs that you've budgeted, they could be disallowed. And as a small business, I'm sure many of you do not have, you know, a big truckload of cash sitting in the back of the lab, and you're relying on your SBIR grants for cash flow. Any reduction in those allowed costs would certainly, you know, require you to seek funds elsewhere to kind of fill that gap. If compliance, I should say, if non-compliance is severe enough, your award could be suspended or terminated, or you could be required to pay back some of the funds. Lastly, you could be suspended from the grant programs entirely. And one thing I did not put on the slide here is that if the compliance violations are abusive and severe enough, you could be prosecuted, and it could be of a criminal nature. So what are some common compliant pitfalls that we see often in SBIR grants? So first of all, sometimes we'll see non-compliance with agency guidelines. So when you get your notice of award, read the fine print. Become familiar with your agency nuances. There's a lot of crossover between granting agencies, but NIH, for example, does not always follow the same guidelines or rules as DoD or the National Science Foundation, and vice versa. So become familiar with, you know, the grants policy statement. If it's NIH, you know, read the welcome wagon letter. If you have an NSF grant, you know, reviews the phase 1 or phase 2 general grant conditions. You know, don't assume that what you did for the Department of Energy is the same as what you would do for NSF. Like I said, there's a lot of crossover, but each agency may have the slightly different or unique policies. Other pitfalls that I see sometimes are non-existent policies of the company. You don't have a grant compliant accounting system. You know, you're still kind of working out of a shoebox, if you will. There could be inadequate internal controls, meaning that you don't have a good segregation of duties. Some examples of this would be where the same person orders the supplies, receives the supplies, pays for the supplies, records the supplies in the accounting system. The same person signs the check, reconciles the checking account, calculates and makes the draw request, records the draw, and files the quarterly PSC 272 for NIH, for example. So basically you have one person that's doing everything and you're not having a good segregation of duties. Now, with startup companies, this is sometimes difficult to separate duties because there may only be maybe a couple of people that you have on staff, but you need to find a way to get that segregation done. That is one thing in an audit that they do concentrate on, is to make sure that you have good internal controls. Is somebody receiving goods and, comparing that to the invoice? If you're using a purchase order system, is that matched up? Is somebody else paying the invoice? And then, do you have another party perhaps recording the invoice? So you just want to make sure that you can segregate these duties as much as possible. Another pitfall that we see sometimes is treating unallowable costs as allowable. And we'll talk in a second here about unallowable costs, but there's a federal acquisition regulation called FAR Part 31, and some of you I'm sure are familiar with that. But FAR Part 31 spells out what costs are considered unallowable. Some common ones that we see often are things like charitable contributions, interest, some marketing costs, um, and further, make sure you pay attention to the agency that you're dealing with. NIH, for example, will treat marketing costs a little bit differently than like DoD might. So they have their own set of rules where things like trade shows and promotional items will be treated as unallowable, and the only advertising costs that are allowed are things like recruitment ads and those advertising costs that are specifically required by the federal award as allowable. So just keep in mind FAR Part 31, that kind of spells out what are considered unallowable costs. And don't confuse unallowable with, non-deductible for tax purposes. Those are two separate things. Unallowable cost just basically indicates that the cost cannot be recovered as a direct or as an indirect cost as part of your grant budget. Another pitfall we see sometimes is a misallocation of costs, and that would be where you would charge supplies to the wrong project. So maybe you have funds left over for one grant, but you don't have funds left over in another, but you're still working on the grant where the funds have run out. You can't really, you know, pay for those supply costs with a grant that is not actually using those particular pieces, those particular supplies. Another thing that we see in misallocation is treating an indirect cost as a direct cost, and we'll talk about indirect and direct here in just a second. Ignoring unallowable costs, you need to make sure that you're accounting for those. And then also not being consistent in how you might treat costs for your SBIR projects versus any other project you might have. So let's say you're doing some internal R&D or you have some product sales. Make sure that your costs are treated the same between all of your different activities, and that you also support them by either an invoice or a credit card receipt or something in that manner. Timekeeping is another big topic that is often overlooked by companies, especially when they first get their initial SBIR grant. Everybody in the company, including those not working on an SBIR grant, should really be completing a timesheet. And this is important because down the road, when you're calculating your indirect rate, those payroll costs need to be accounted for in that calculation. So even if you have somebody that's just doing administrative work, they really should be keeping a timesheet as well. And that timesheet should be completed based on actual hours worked, not based on the budget for the SBIR grant that you submitted. So if in your original grant proposal, you indicated that somebody was going to have a 25% effort, their timesheet should really reflect the number of hours they worked, not necessarily the 25% that you budgeted. In addition, the expenses should be reasonable. They should be allocable. In other words, you can identify which project they are working on, allowable, and they should be consistently applied, as we mentioned before. Direct costs, those are costs that can be assigned or identified specifically with a project, and that you can assign that relatively easily with a high degree of accuracy. If you think of your grant budget that you submitted in your proposal, there were probably line items in there such as like salaries, supplies, consultants, maybe you had some travel, subcontractors. Those are all going to be your direct costs. Indirect costs are those things that you need to run your company, but they don't have a direct relationship with a certain project. And you can't really show that its expense is, directly related to that project. So things like, office supplies, telephone, legal and accounting, perhaps rent, all of that, what we would consider overhead expenses, those are going to be indirect costs. And as we talked about a little bit ago, the unallowables, of course, those are part of that FAR Part 31. And again, just watch for agency nuances. Their DoD tends to be a little bit more generous with some unallowable cost categories compared to NIH. The other part that's not really a cost, but it is part of your grant budget, is the fixed fee. Many of you, I'm sure, had included a 7% fixed fee in your grant budget. This money you can use for anything. You can use it for unallowable costs. You can use it for just keep it as a profit. A lot of companies use it to pay for patent costs, which typically are going to fall into that unallowable category. So you can do whatever you would like to with a fixed fee. You can keep it as a profit, or you can use it to pay for unallowable costs. As part of the inconsistent or misallocation treatment of costs and unsupported costs, you want to make sure that your costs are actual and they're not just an estimate. So you should have an invoice that is, backing this up, or you have a, if it's a credit card purchase, you've got some kind of receipt. Also, as we talked about a little bit ago, make sure that you treat your costs the same for your funded projects versus your non-funded projects. Big theme here that you're going to see that I'll be doing today is we're going to talk a lot about timekeeping. This seems to be one of the biggest areas that companies have the most struggle with, so I want to make sure that we cover it again. You want to make sure again that you're maintaining your timesheets, that they are tracking the time by project. You're also tracking vacation and holiday pay. That's either going to be a fringe benefit or a indirect costs, and that you're allocating salaries and wages by percentage of effort. And we'll have an example of that here in a little bit. Again, make sure that all employees are filling out a timesheet. And there's an example here of one that I think this was actually pulled from the NSF website, but If you notice at the top, there's a place for the employee and the supervisor to sign off on the timesheet. And you should have both signatures on these for every single timesheet that you fill out. Now, the days across the top can be modified based on your pay period. So this one, for example, is for a semi-monthly pay period. But if you have a biweekly pay period, you can just modify this. And if your company is small enough and you just have an employee and a supervisor, obviously they'll have to sign each other's timesheets. But so even the owner of the company should have another person review their timesheet and sign off on it. On the left side there, you can list out each of your projects. So this would include each of the grants that you have. It would also include, any independent R&D. You should be tracking that time separately. If you have product sales or you're doing consulting that's outside of the SBIR arena, you can list those as projects. And then below you've got your bid and proposal time, your indirect admin time or overhead time, and then any vacation holidays, sick leave, etc. should also be indicated separately. Because remember, even if you are you have an employee that works 100% of their time on a grant or project, any vacation, holiday, or sick leave time is not considered a direct cost. It's considered a fringe benefit or an indirect cost because, from the government standpoint, how can you be working on their project when you're on vacation? So you should separate that out even for employees that have, devoted 100% of their time to a particular project. Any questions so far? We're kind of covering a lot of ground here. All right, so yeah, go ahead.
I was just saying, I'm not seeing anything in the chat box.
Okay. So now that we know kind of why we need to have a good accounting system and what we should be looking for, how do we go about implementing it? Well, every company should have a double entry accounting system. I mean, most of you that have phase 2 grants, I'm sure, by now you already have some kind of accounting system implemented. What we don't want to see is somebody that's just keeping their books like on an Excel spreadsheet or just basically has a check register. But your accounting system should have a chart of accounts. That's basically the expense categories. So those are things like salaries, supplies, rent, telephone, office supplies, etc. But in addition to that, you have to have the ability to segregate your grant projects from any other projects that you have, and you need to be able to segregate out your direct costs from your indirect, your fringe benefits, if that's a separate budget item, and obviously your unallowables. So in order to do that, your accounting system should have some kind of project cost ledgers, and that can be maybe a class within your accounting system. It could be a department, it could be a job, it could be something else. So what I did is I created a fictitious company called Research Ingenuity. And in this particular case, I have a company that is using QuickBooks. I think a lot of you probably are already using QuickBooks, but even if you're using something else, the same would apply. And in this case, I implemented the class tracking in QuickBooks to keep track of the project cost ledgers. So for each of the projects, I have a separate class. And then within that, I also have a class for the fringe benefits, the indirect costs, and the unallowable costs. And we'll kind of run through first a payroll example of how you would translate your timesheets to payroll and how that would be split between all of the different classes. The first thing I like to do is kind of set up a spreadsheet, and I'm going to spend a little bit of time on this because I know there's a lot going on here. But basically, you know, when you record your payroll in QuickBooks, you really should be allocating everybody's payroll based on the hours that they worked on each project as a percentage of effort, as we talked about before. So in this particular example, I've got 7 employees that I've each listed on the left-hand side of the spreadsheet. And under the total column, I listed what their gross pay is for this particular payroll. Now, this could be somebody that is salaried. It could be somebody that's hourly, but what that represents is their total gross pay for this particular pay period. And then right below that, where you see the payroll tax withholding, the health insurance, the 401k, those are all deductions coming out of the individual's paychecks in total. And then the net pay is going to represent the total amount of net pay that the employees are going to get. And obviously that amount is what's going to be coming out of your checkbook. So that's kind of the starting point to record the payroll. But now we need to split this up between all the different projects. If you were not a government grant recipient, you probably would just record the payroll as, you know, 28,193.37 would just go to salaries and wages, and you'd probably have some payroll withholding liabilities of, you know, roughly 8,000. You have a reduction of your health insurance expense, and you've got a 401k contribution there that you would be, you know, remitting to your 401k fund with a net pay then of 18,000 or a reduction to your checking account for that amount. However, since you are in the SBIR world, we need to allocate that $28,000 of gross pay between all the different projects, indirect, fringes, etc., that the employee worked on. So the first thing that I do to build this is to take their timesheets and list out the hours that they worked on each project for this particular pay period. So for example, if you look at Penny Smith, Penny worked 100 hours this pay period. And again, it doesn't matter if this pay period had 80 hours, if it had 120. We're doing this based on percentage of effort. And again, it's just allocating that gross pay. So Penny had 46 hours on the NSF phase 2. She did some work on, you know, the NIH grant, had some independent R&D hours, did a little overhead or indirect of 7 hours, had some fundraising time of 5 hours, which fundraising is considered unallowable, and then had PTO hours of 8 for a total of 100. And then basically at the bottom, we're going to convert those hours to dollars based on her 5,000 that she earned in gross pay. So under the NSF phase 2, you can see where she had $2,300 that's going to be allocated, or basically it's, you know, 46%, 46 over 100 hours times her $5,000 that she earned is going to be allocated to the NSF phase 2 and so on. And you do that for each employee. And when you are done, at the bottom, you can see the proof there. I have 28,193.37 of total wages that are being allocated. But when I enter this into the accounting system or enter this into QuickBooks, I'm actually going to increase my salaries and wages by 4,692 for the NSF grant, I'm going to allocate $3,998 to salaries and wages for the NIH grant, and so on. So instead of having just one entry to my salary and wage gross pay account, I'm going to have, all the ones that are listed there to each class or each department or cost ledger. So it gets to be a little bit more complicated, but once you do that, on the next screen here, you can see where my actual accounting records, then my salaries and wages at the top there are going to be allocated all the way across to all the different categories. And why this is important is, number one, we need to do it. We need to segregate our costs. And number two, it becomes very handy when it comes time to prove out our indirect rate. So this example here, as you can see, I've got on the left-hand side there all of my chart of accounts, my categories. So those are all the expenses that my company incurs in costs. So I've got salaries, I've got, lab supplies, rent, phone, computer supplies, dues and subscriptions, etc. And then when you record all of those costs within your accounting system, you also assign a project, a class, or a department to them so that they end up in either, your project 1, project 2, 3, or indirect. So as you can see at the top, I kind of have most of my direct costs there, and then my overhead or my indirects are either going in the indirect column or the unallowable column. Now, the beauty of setting it up like this is, this spreadsheet here came right out of QuickBooks. All I basically did was I ran a profit and loss by class and then exported it to Excel. And then when I exported it to Excel, I just had to do a little bit of, formatting to it, but I can very easily calculate my indirect rate. And it doesn't really matter if I'm using my direct wages as a base or if I'm using direct costs as a base. Either way, all the information is here so that when DOD or NIH or Department of Energy says to me, I need you to prove out, the indirect rate that you're using on the last grant proposal that you submitted, it can very easily be done just by pulling this report out of your accounting system. So basically, when you're entering all of your costs, all of your expenses, you not only put it into the category, which is on the left-hand side, whether that's insurance or postage or printing or whatever it happens to be, you also assign it a department, a class, or a project code, and those are the things on, in the right-hand columns. And why this works so well is, you need to have a set of books just to manage your company. You need to have a set of books in order to do your tax returns, and you need to have a set of books to comply with your grant accounting. But by setting it up this way, you don't have to have 3 sets of books, you just have 1 set of books. So this spreadsheet will help you with your your grant accounting, but the total column is what you would probably use to, manage your company and what your tax preparer would use to, complete your tax return. Um, and speaking on that topic, it is really helpful if you have any R&D that you're doing that is not funded by an SBIR, STTR, or other grant, a CTC grant, for example, but maybe you're using investor money to, to further some research. You'll want to segregate that out into its own project or class within your accounting system because those costs are going to most likely be eligible for an R&D credit, whereas funded research, an IE, an SBIR grant funded research is not going to be eligible for the R&D credit. So it's important to, to segregate out those costs from, just your other grants. So once you have all of that in your accounting system, what else can you use it for? Well, I actually use it to help me monitor my indirect rate. So if we go back here, what I like to look at is my indirect costs that I've actually incurred. So in this particular case, this is for an entire year, but it's 442,000. I like to kind of compare that to what I actually drew from my grants as indirect costs during that same period of time. With many agencies, or basically all the agencies, you can't really draw more costs than what you've incurred, and you can't draw more than what your allowed indirect rate is. So I kind of use this to monitor both, to make sure that my indirect rate is at least the same rate or higher than what was in my grant budget. And I use it to make sure that I'm not drawing more indirect costs than what I'm actually incurring. So this is something, if you're looking at this over time, you want to make sure that, that you're keeping that in line. You can also use this then to compare it to the grant revenue. So ideally, if you're really tracking this, especially with NIH, as those of you that have NIH grants know, that's a pay-as-you-go agency. So you really shouldn't be drawing more funds than what you've actually spent. So I kind of use this, profit and loss by project or by class to monitor that my grant revenue and my actual costs are the same for those agencies that are pay as you go. And obviously, being able to export it to Excel really makes the job a lot easier. And the other thing that you could do is you could set this up in your accounting system and input the grant budget within your accounting system, and then you could compare your grant budget to actual, just to kind of see how much you have left to spend. I actually like to have a second spreadsheet that I use for my grant draws that mimics my original budget. So I'll have, a spreadsheet that kind of shows what the budget is, all the budget line items, and then I'll input, the actual costs as I'm incurring them. I use that not only to kind of monitor, but I also use it to calculate a draw request for those, for those grants that are pay as you go. Then I'll compare that back to QuickBooks or to my accounting system to make sure that, I've captured everything. So I kind of use it for both. I think, are there any questions, Brian? I see a few things coming up in the
Yep.
corner, so I'd be
Yep.
happy to take some questions because I know this is a lot to kind of cover in 30 minutes. So I'm happy to take questions.
Mark, I don't know if you want, so Mark Nelson, I see you asked about doing the math for the indirect rate. Do you want to chime in? Do you have something more specific there, or you're muted? Oh, there we go.
Yeah, I'm just looking at the slide 14 here, and you've got the total indirect to direct math calculation there. Remind me again what the indirect, how we're determining indirect and direct here.
I'm not sure I quite follow.
Okay,
So, yeah, go ahead.
yeah, I'm looking at the upper part of the spreadsheet and I see the total of direct costs.
Yeah, okay,
And
so let's just kind of go back. So the direct costs are going to be a subtotal of project 1, 2, and 3.
thank you.
So yeah, so what you would do is, from your accounting system, you may not have the ability to total up, you know, your direct projects, if you will. However, there's a way to use subclasses and things. I won't get into all the, the nitty gritty of it, but usually, if I've got all my projects set up, and project 1 could be a DoD grant, project 2 could be NIH grant, and project 3 could be internal R&D. Those would all be considered direct projects, if you will. So once you lay that out, you do want to total those up. And so that's what total direct costs there is the total of project 1, 2, and 3 together. And then applying your indirect costs, in that bottom example there, the indirect rate using total direct cost base is taking my overhead or my indirect or my F&A, depending upon, what term you like to use. That's the 442,000. The total direct costs of 536 should be the total of project 1, 2, and 3 together. And then
Okay.
that rate is then, the 82%. And then if you're using direct wages as your base to calculate your indirect rate instead of direct costs, then you're basically looking at, the direct wages of 248. That's the top line up above of project 1, 2, and 3 together.
Mm-hmm. Yeah, I guess, what we're struggling with is as we're looking forward to the next grants that we're applying for is how to set that indirect, how to set the overhead rate at something we can live with, but doesn't,
But you,
raise
but
eyebrows too much.
right, well, you don't want to leave any money on the table, obviously. And so what agency are you applying with?
Right now we're in applying to NIH, and I'm trying to think what part of
Okay.
NIH.
Yeah. Okay. So
NIH.
NIH, as you know, NIH will allow you a 40% indirect rate without having to negotiate with them, right? So a lot of companies just put down 40%. Now, is that right? Is that wrong? I can't really answer that. It really depends on your company. However, if your indirect rate is much higher than that in reality, I've seen some indirect rates that are over 100% because maybe they only have one grant going on, right? And so you have
Mhm.
to spread all of your overhead over one project. So by asking for only the 40% because you don't want to go through the process of negotiating an indirect rate, you could, you're going to run out of money, right? Because your overhead is actually much higher than the 40%. Now, often what I see also though is some companies will, if the funding agency or institute, if you're talking about NIH, some of the institutes, have bigger, deeper pockets than others. If your institute has a cap that they've identified, a funding cap in the RFP, then you're kind of stuck. So if they say, it's you're not going to get funded if it's over 250,000, right? Companies usually will kind of work backwards. Then they'll say, okay, I know that I only can get 250. The fixed fee is 7%, so that's what, you kind of back into it, and then they go, well, I know I'm going to need 200,000 in payroll and supplies, and I need to hire a consultant. And in order to get to the 250, boy, that only leaves me with about 10,000 of indirect, right? So, sometimes I see that, especially in a phase one, where you're kind of stuck backing into that indirect cost or indirect rate just to keep it under that funding cap limitation. The danger of that, like I said, though, is that you can't run your company if that's the only game you have in town, right? You got to be able to pay for your other overhead another way.
Yeah. Thank you.
Yeah. Okay.
Okay, we have a couple more in here, Wanda. So one is, any advice for multi-year projects?
As far as
So Connie,
yeah. So as far as tracking it, that's are you using QuickBooks, right?
Oh, absolutely.
Yeah, okay. That makes it easy. So one thing that I do in order to, like, especially your phase two, it's not going to be a nice calendar year start and end date, right? It's going to be something where it starts August 10th of 2020 and goes through, August 10th of 2022, perhaps, right? So what I'll do then is I will, in order to kind of track my my actual costs for that project, is I'll go into the profit and loss by class report. I'll filter it to only include the grant project that I want to see, and then I'll change the date parameter to all dates, because that way it'll cover everything for that entire project from the date started till the day that it ends. Now, if your question more is about calculating your indirect rate, that's done on your fiscal year. So it's not done on a project by project basis. It's based on your fiscal year. So if you have a calendar year end, you're going to be always looking at your indirect rate on a January through a December time period. So I'm not sure if your question related more to that or just tracking actual project costs for that grant that spans over multiple years.
No, that validated two aspects of my question. That was good.
Okay, good.
Thank you.
Yep.
good. And another question here is, if we have a capital purchase in our budget and had a quote in the grant, are we required to use that particular vendor and specific equipment, or do we have some room to validate that it's still the best choice? Who has to approve this? Grant administrator, program officer?
Yeah, within most agencies, is this NIH or is this somebody else?
The other
It's
Connie?
NIH.
Okay, Connie. Yeah, so within NIH, you have a rebudget possibility of 25% that you can rebudget without having to get prior approval. And the 25% is 25% of the total award, not 25% plus or minus on each line item. So in other words, if you have, $100,000 grant, 25% of that is 25,000. So, you don't have to match up salaries and wages. Let's say you budgeted 50,000 for wages, but and maybe you had another 5,000 for consultants, and you decided to forego the consultant and just use that money to pay for more salaries instead. You can do that because you have that 25% rebudget between your direct costs, obviously, without having to get prior approval. I think with the equipment, you got to be a little bit more careful. I think if you're buying the same piece of equipment that you had in the original grant, obviously when you did the proposal, you got a bid, and then 9 months later, you know, you finally got your notice of award, right? Because you're, you know, it's not, you know, it's not like you put your proposal in and you find out next week if you're going to get it or not. So prices can change. I'd have to look to make sure at the NIH pre-approval guidelines in the grant policy statement. My initial reaction is if it's the same piece of equipment that you budgeted, you got a proposal, and it's within that 25% wiggle room, I think you're probably okay to, you know, to go ahead with whatever you need to do, because obviously prices are going to change. I would just probably double check the grants policy statement to make sure, because there is a section on there in there on whether or not you need pre-approval, but my initial reaction is no. And Connie, I can double check on that for you too.
Okay, thank you.
Okay, great. Well, that's all the time we have for this session. So Wanda, thank you very much for that. If people have follow-up questions, maybe send them to me in an email, and I can reach out to you, Wanda, unless you have another approach.
Nope. There's my contact information as well. So you can certainly contact me as well. A lot of you probably already have my email address, because I think I've worked with a lot of you before.
Someone asked if we could share that spreadsheet, and if you don't mind me sharing your slides, that spreadsheet will be on the slide, I guess, if that's what.
Sure, either that, or I can just share, I can send you, Brian, you mean the payroll one and the indirect?
Yep.
I can just send that spreadsheet to you, because that would have kind of the, you know, the formulas in there too.
Okay, perfect.
I'm happy to do that.